Hi everybody, welcome to my channel. This is my October 2022 net worth update. So as we all know, the stock market continues to decline and we are losing money. So when we look at how much we have in assets minus our liabilities, that's how we calculate our net worth on a monthly basis. So some of the things that I do, everybody calculates it a little bit differently. So for example, for our home, I use the purchase price we paid. Even though our home has probably gone up almost $100,000 in value in the last 2 years, I don't use that number because we're not selling our home right now anyway, and I'm basing it on what we paid for it. So obviously there is more equity in there, so that technically would bump our numbers up, but because it fluctuates and it's very subjective, like I could say, oh, it's worth this amount. But to a buyer, maybe the buyer's not willing to pay that and it's actually worth less. So because of that, we stick with using the purchase price. So obviously that is a consistent every month when I calculate this. That value doesn't change because what we paid is what we paid. So the next one that I look at is I lump together our retirement and different types of savings accounts. So this can be, includes both my husband and I's 401k, 403bs from our employer. It includes the Roth IRA that we have. It includes my M1 brokerage account that I recently opened. And then I do call out, like it includes our other like just savings accounts, like general savings accounts. And then I do call out our Fundrise account in a separate line item as a for real estate. So I just wanted to keep that separate since it is a very different class. So I do just make that a separate line item and call that one out separately. So then what I do is I add up all of those. So the home value, how much we have in our retirement and savings accounts, how much we have in that Fundrise real estate account, add that up and then subtract out what we still owe on our mortgage. And that gives us what we are tracking as a net worth. So like I mentioned, it being down again. So really, August was the last time we had seen an increase, and even before that, it was 3 months of very negative numbers there as well. But in comparing to our September numbers, we are down another $17,000 on our net worth, despite continuing to invest every single month. We both invest our 6% to get our 3% matches for our employers. Plus, we are consistently investing into different savings and sinking funds, into either our M1 account or our Fundrise account. So that's something I also track kind of on a separate tab in my Excel documents that I track, is how much money we put towards different types of savings goals every single month. So some of these are sinking funds where they're not investments. They're money that I'm putting aside for a use for something. So for example, our insurance, I put $200 every month into in a savings account earmarked for insurances so that when our homeowners and our auto and our life insurance come due, like we have that money. I'm sorry, not our homeowners, that's escrowed, but the other ones. We also do money set aside for like home and auto. So any future home and auto repairs kinds of things when we need to replace vehicles, things like that. So those aren't really investments, but yes, they do add to our net worth because it is money that we have in cash. So every month I calculate how much money we put into those different forms of savings divided by our income and calculate a savings rate percent. And I've done some other videos on that, how we track that, but we typically average around 40%. This last month it was only 32%, but we did have some extra income. So going from 318,000 down to 301,000, and really sad when you look at it on a graph, the trend line is going down. It's not even going up despite continuing to invest probably like $1,200 a month into actual stock market type accounts. So our retirement accounts and either the M1 or the Fundrise, like those are, you know, stock market type accounts where they're volatile. They're not just a savings account earning interest. So despite all of that, the number still continues to go down. But like I've talked about in other videos, that's okay because we have better buying power now while the market is down. So we are buying more shares at a discounted price. So when that market recovers, it should recover big and we should see bigger returns. I am anxiously awaiting when that does occur. But in the meantime, we continue to contribute to these accounts, and eventually our net worth will get to where we want it to be. This is something that I track and have as goals. I've set goals to have certain net worth by certain ages. So this certainly is not helping that as we continue to trend downward instead of upward. But I just want to be transparent and encourage you that even when you're tracking these numbers and looking at it and like $17,000 we lost, like what's the point kind of thing, like just to remember that the market always does rebound and in a big way. I had just seen something on Instagram where it kind of looked at over the years when the stock market goes down in, you know, certain years like 2000, 2008, even 2020 when the pandemic hit, and now again, it always is recovering. And if you look back, like it has recovered in big ways. So trying not to be discouraged by your current losses and knowing that if you are a true investor and investing for the long haul, that you will see those returns and it will be worth it. So to either start contributing if you're not, or not to stop contributing, because it will be worth it in the long run. And I will be here to share those wins when they eventually do occur. So I just wanted to do a quick little video just to update that, give a little re-encouragement, I guess, to keep pushing on despite the current economy. So I will come back again next month for another net worth update. Have a good one.